Hello friends, you're watching Tax Dosti videos. I'm your tax dost and tax host Anthony Williams, and we'll be taking up the discussion of company business tax returns. In this part, this is part one, and in the following parts, you'll be seeing how to correctly fill your business tax return, meaning that this is a sample of a tax return of a company. Company means a business that is separate from its owners and it is taxed separately. So its tax return consists of income from business, and these are the tabs: manufacturing, other revenues, management, inadmissible. We'll be discussing all of these in coming parts. We'll start by discussing the first and most important part of any business, that is sales. How do you enter sales data in your company tax return? You do remember that companies are required by tax law of Income Tax Ordinance 2001 of Pakistan to have audited accounts. So definitely this data is coming from audited accounts. But why, what and why you will enter certain amount in certain fields, we'll be discussing that. So the first tab in the head, income from business, and as you know, there are other heads of income also: capital gain, other sources, foreign source income. So all of these are different heads of income. We are focused in these videos on how to fill the company business tax return. So the first tab is manufacturing and trading items. But the interesting thing is that this is the tax return for tax year 2024, and they have also included service business in this manufacturing and trading, meaning that if you have a manufacturing business, you manufacture things and sell them, definitely you have to fill this out. And if you are doing trading, meaning you have stock, still you fill this tab. And even if you are a service provider, you will be filling this tab. But if you have other types of revenues, which we will see in our most probably part 3 and 4 or part 4, then you will have to fill your sales data in other revenues. So we'll start, and the basic structure is that these are the codes and these are different heads and subheads where you have to fill the data. Some heads like income and loss from business, net revenue, gross revenue, and all these that are highlighted, these are filled by IRIS itself, meaning the IRIS software on the FBR portal where you are filling this tax return. So these are calculated by IRIS according to the tax year for the relevant year. We are discussing 2024, and this is also applicable for previous years as well as 25, 26. There may be some changes, like for this year they have included services also. So all those service providers like accountants, lawyers, IT freelancers, they can fill their sales data here instead of in other revenues as for previous years. The other structure is that this first column is important. All the sales data will come here, and these two other columns depend upon the law. Some income is taxed on gross basis. So for that we will enter that amount once here in the total amount, and then second time here in the exempt amount, and it will not be subject to normal taxation. But otherwise, if any sales income which is not exempt or which is not subject to final taxation, it will not come in this middle column. It will stay in the we will only put it once here in the total column, and once we press the calculate button, it will come here in the amount subject to normal taxation, and then normal tax rates will be applied. Hopefully this final tax and normal tax has been explained in our other videos, and we'll hopefully link in this video. You'll find the link at the top, and you can go into what's final income and normal income. Now we'll start. The first thing I'll say that the first row of income loss from business, code number 3000, This amount will be great for all these three, and we'll be mainly talking about the total amount because this is the column we have to, every amount will come here. But here in you will not be able to enter any amount because IRS calculates this amount. What is this amount in terms of financial statements or in accounting? Because you have to remember that financial statements or international financial reporting standards or accounting rules are for calculating financial accounting profits or net profits or gross profit. And tax law, Income Tax Ordinance 2001 and tax laws help you calculate taxable income. So there's a difference between net profit and taxable income. So the technical point here is that the system will calculate the income loss from business here, which will be the net profit of your business, but which will not be the taxable income. Taxable income is separate, and it is because there are many other deductions that will happen here and also in other parts of the tax return. So the amount shown here is the net profit as shown in your financial statement. This is the net profit. In the next, which is then again a bold figure, you won't be able to enter any amount here, is net revenue, meaning that sales tax, federal excise, brokerage commission, discount, freight, outward, these have been deducted from this. Excuse me. And then again, IRS will calculate it on the basis of all the sales data and different data that you put in these columns. Okay. So now we come to the gross revenue, meaning that these two columns, this is the main net profit, this is the net revenue. Now what's the gross revenue? When you enter the gross revenue, you have to subtract, exclude sales tax and federal excise duty. What is sales tax? Sales tax is a tax collected by businesses on their sales, and that is paid to the government as tax on behalf of the customer of the business. So sales tax is not your income. Similarly, federal excise duty is a tax paid by, especially by manufacturing businesses. It may not be applicable on trading or service businesses, but it is especially paid by manufacturing businesses on the production and sales of their goods. So basically that's why you deduct these amounts from your gross revenue, because when you sell, you invoice the customer for 100 rupees, that is the sale price of your goods, and 18 rupees for sales tax and 5 rupees generally for federal excise duties. So your total gross revenue from a customer may be 123 rupees, but you will not show 123, rather you will show 100 rupees. Now the income tax, this is 3004. The first row that you can put data into is the gross domestic sales or service fees, meaning all the sales that you have made in Pakistan to Pakistani customers who were in Pakistan will come here, and sales tax and federal excise duty will be subtracted from that amount. So you will put only 100 rupees here. Now the second thing is gross exports and sales. And if you are not providing, sales means sales of goods and service meaning sales of services. So if you are a service provider and you have provided sales to customers outside of Pakistan, that is export services. And if you have provided goods outside of Pakistan, that is export of sales. So that amount will come here. IRS will add these two amounts in these two fields, 3304, 3308, and the total will come here as gross revenue. And then again, you have to make sure that sales tax or federal excise is not included in these amounts. Going further, basically the selling expenses, these are not income, these are expenses. But one thing to note is that basically, as in the next video, we'll be doing cost of sales, purchases, stocks, and all the direct expenses that you require to produce goods or to produce services or to trade your stock. So all the direct expenses are on this first tab of manufacturing and trading, of which we are discussing today the sales portion. And all the indirect expenses are in the management, administration, selling, and financial expenses. So all those expenses that you can clearly trace or clearly connect with your sales, like domestic commission. For example, you pay 10 rupees for to any person who makes a sales of 100 rupees domestically, or for example, of you pay foreign commission to people who make sales outside of Pakistan. So those will come here because you can exactly connect them with the number of units you sold. Similarly, all those brokerages that are directly connected with your sales, and discounts, meaning trade discounts, and freight outward, meaning the amount you paid to, that is the delivery charges to deliver the goods or services to your customers. The direct charges, like in Food Panda or the Raz, you can see they show you direct how much they will charge, 100 rupees or 500 rupees to send that to your office or to your home address. So all those exact things, if they are paid in Pakistan, it will come here in this column 3011 code, and it will be regarding all those expenses directly paid by you for making a sale or providing the product or service to the customer. And if it's outside of Pakistan, it will come here foreign commission, brokerage, discount in this column, and it is 3012. Rebates and duty drawbacks are basically regarding exports. So if you make exports, the government gives you incentive that if you made the same domestic sale, then you may have to pay some custom duty or some kind of taxes on them, for example, federal excise duty. But if you export those things, then sales tax and federal excise duty become zero, or if you pay them, you get those money back. So that amount will be entered here. So these are all the amounts, these are all the expenses, selling expenses, that can be directly traced to or counted for along with the number of units or the number of services you provided. So they come here, and other kinds of selling and advertising expenses, which maybe you have given on digital media or indirect expenses, they will come here. So this is how you will prepare the company tax return. Data you'll take from your audited financial statements that have been audited for the year, and then you will maybe recategorize them here in a sense that they may be slightly different, but for sales, definitely sales tax, federal excise duty is also separately shown in financial statement. So you will do the same here in the income tax return also. And for this domestic commission or foreign, you may show it separately, or you may show it as part of your management and selling expenses, but you will reclassify it here, since these can be clearly, and you should keep your accounts, ledger accounts, and your bookkeeping so that you can separate these, because this is the requirement of the tax return. And we have put in all the sales data and selling expenses directly relating to sales data in this tax return. I hope this is helpful for you while you are doing this, and this can be applied to sole proprietor business also, people doing business, small businesses. Their business tax return is slightly different, and so is for the partnership businesses where people are, two or more people are business partners. But generally this is the scheme, and these are two income amounts, these are expense amounts. So this here, when we say net revenue, So these two amounts will be added, and these two amounts will be minus, and this rebate will be added into this income, and you will be shown net revenue excluding sales tax, federal excise duty, brokerage commission, discount, and freight outward. So these are the different fields that you have to fill in order to accurately make up the income part of the tax return. In the next video, definitely we'll go through the cost of sales, and we will also discuss the different income tax law and rules regarding income, closing stock, opening stock, cost of sales, and other things. Here, I would just like to add that there is a separate law of sales tax, and definitely sales tax is calculated and charged on domestic as well as export sales according to that law. And there is a separate federal excise law on these, which will be calculated here. And for this domestic commission, brokerage, discount, you have to remember that these are calculated, or these, for especially duty, drawback, and rebates, are calculated according to Customs Act. And so different laws come in play when you are entering this sales data. Other than that, for the tax law, as far as tax law is concerned, these incomes are just the starting point. These are not taxable income, meaning that gross domestic sales or gross export sales separately or together, which makes the gross revenue here in 3009, do not equal taxable income. Taxable income is something that will be calculated after we have entered all these data along with other things like tax credits and general deductions. What you see, and in the next video we'll be discussing, are specialized or business deductions, and along with business deductions there are general deductions, then there are then there is tax credits, then some incomes as well as some expenses are exempt or subject to separate income. So you may be having two types of domestic sales, one that come under the normal tax law and the other that come under the fixed tax law. Then in case of IT freelancers, their income, gross income from export sales will come here, and it will also come in the second column since they are taxed on a special tax rate till tax year 2026. So in this way, there can be many layers and many complications, but the simple thing to understand is that you'll enter sales in these two columns if it's export and local sales. And if you don't have any export or don't have any local sales, you should only enter one amount. And similarly, if you don't have these discount, brokerage, on your sales, then you can leave these amounts blank. Then your gross revenue will be. And similarly, if you don't charge any sales tax or federal excise duty because of the law or any special circumstances, you don't need to minus them since they are zero. So this is how you fill. This first column is compulsory, and not all of these fields will be open to you. You will only be able to enter these data points: 3004, 3008, 3011, 12, and 70. And tax laws have their own logic, so you'll have to learn these things, which I have tried to highlight in this video. Let's meet in the next video. You're watching Tax Dosti videos. This is our playlist, our podcast on how to file a business tax return, and we are focusing on the legal structure of companies, so that you get so that we can discuss all the fields, all the rules regarding business income, how to calculate income in Pakistan according to tax law of Pakistan. Thank you very much. Take care.